Hi, everybody. Welcome to Accelerating Lower Middle Market Value. We are so excited about today's guest, Cristine O'Keefe. Cristine is a dedicated professional with a diverse background in commercial financing, education, and business development. What's really interesting is since I've learned about Cristine is that education background and how she weaves it in her professional experience. She has extensive experience in government guaranteed programs, asset-based lending, construction and real estate loans, and more. Her roles as a musician, teacher, office manager, and controller have honed her skills in listening, evaluation, communication, and teamwork. So let's think. Cristine is not your average lender, and that's why we have her on the show, that we really, really appreciate her unique perspective and what she's going to tell us. Cristine is a board member of the Turnaround Management Association in upstate New York and holds a Bachelor of Music in Education and a Master of Education in Music from State University of New York in Buffalo. Thanks, Cristine. Thank you for joining us.
Thank you. Thanks for having me.
So actually, and everybody's probably familiar, we have usually a list of questions that we go through for this podcast. But even as I was, speaking through that intro, the fact that you are a director at the Turnaround Management Association, I want to learn more about that. That is a really interesting role. And the Turnaround Management Association is an association that I just learned about recently. Tell us more about your role at the Turnaround Management Association and why you joined that. Give us a little bit of snapshot about that.
Okay, well, that's fun. The TMA, as I'll call it, because it's easier to say, is a group of diverse professionals that focus in on the challenging aspects of business. This is where you're going to find your bankruptcy attorneys. This is where you're going to find people that do forensic audits. This is where you're going to find lenders that might lend outside of normal, banking parameters. And I joined the TMA when I first got into the business because I was told that it was a good place to do business development. And what I learned is that there's a whole world of support and consultants out there for struggling businesses. And I found a lot of really great professionals in that group. Our group in upstate New York is in the Buffalo Rochester area a lot. That's where a lot of the meetings are. And so I've really connected well into my region through this group. It's an international organization, and so there's many levels of involvement for people. And one thing I've also learned is that in our local group, I now have access to all these other, out of our area groups. So it's a great place to find resources and be a resource. And I'm actually on the board as a communications director, which is fun, just helping get the message out, what we're doing, and getting people to our events and getting to know each other.
Thank you, Cristine, for sharing about your experience with the TMA. Let us, help our audience understand your personal journey, that we really want to understand you, what led you to a career in commercial financing. Help us understand your story.
All right, thank you. So again, if you look at my resume, you see that it's not a straight line by any means. After my teaching career came to a halt based on really just the budgetary issues, it was around 2008, 2010, and so music teachers were not in high demand on school budgets. I ended up working in a business that allowed me to really manage their AP, their AR, and then their HR, and then all the financing function. And I really got to grow up really fast in learning all the ins and outs of what is going on in that business. And in the course of doing so, we discovered that there were some issues. We really needed to increase our line of credit. We needed to, find some capital. And in that process, what I recognized was how important reporting was. We had to get our accounting function really built up. And as a music teacher, that was a fun project. And as we did that, though, and we worked with different lenders and we worked through different challenges that we had, it really showed me how important it is to have people that you can, seek advice from. People that know things that I didn't know, which was a lot. People that had a network that I didn't have. Going from one career to another meant that there was no smooth, sharing of professionals. It was completely different, education to business, even though I was still located in the same area. And so that transition, working with that company, and then when it was time to go, I ended up going into consulting because I wanted to be that resource for other business owners that may have had the same questions, or at least wanted someone to say, I totally understand. Now help me fix it. And that's really what drew me towards this. Now, never worked in a commercial bank myself, but I have done transactions and I've gotten to know a lot of bankers. And so that I guess I have to be careful on saying, how did I get into commercial lending? Well, it really was from the School of Hard Knocks and being in that seat, in the controller seat of a business and trying to solve problems.
Great. Yeah, I love that perspective of you were on the other side of the seat and you got to, experience a lot of difficulties and just learning yourself. And now you're on the other side. And so you can relate to, business owners and people in the finance position that, are really having these struggles and that really could use somebody like you to help them guide along that. And I think, that perspective to just like in finance, but just like in sales and marketing, that um, I relate it that I think a lot of people think, finance professionals that they should be able to, do your reporting, help optimize margins, and be financing experts too. And it's very rare to find that trifecta. And sometimes they add on tax management and tax planning strategy too. And so it goes beyond just being a trifecta, but it's kind of the same thing as sales and marketing. Somebody that's a digital marketing expert is not necessarily, the best for new business and new sales. And so there's the spectrum that has to, occur. And so you find your team members or even yourself where you have your strengths, but then somebody like you understanding the credit markets and understanding how to work with lenders, that's ultimately a gap to fill that, and they can fill that with your expertise. And so that's good. So yeah, appreciate you filling us in on your background there. I'd love to understand, because, personally knowing you that in your background, you were a music teacher prior to, commercial lending and being in a commercial financing role. Walk us through that a little bit, like, and especially how does that background as a teacher contribute to what you're doing today?
Yeah, I think that's a great question. For a long time, I tried to cover that part of my resume up because it felt like it made me illegitimate in a sense. Because I didn't go to business school, I didn't have an MBA. But what I realized is that having been a teacher, music teacher to young beginning students, it gave me a lot of skills. Number one, in listening. Number two, in knowing where we want to go and what do we need to get there. Number three, building and growing a program. Consider that like business development. Number four, working with administration, working with parents, consider that relationship building. All those different aspects that were a part of my teaching career become very important almost every day. And I would say at the most base level, I find myself being an educator both with my client and sometimes with the lender as well, because I have to be able to communicate to both sides what's really going on, where's the breakdown, how do we solve this problem, who isn't understanding what, so that that communication gets to the point of execution so we can actually get things done.
It's interesting that you brought up like that engagement with parents and doing that relationship management, because I know, like for my wife, anything that happens at school, she knows every little thing, and she is, and it, as a father too, I'm looking out for my children, but I know my wife is Mama Bear, and and that you want to make sure that Mama Bear is happy, and but at the same time, it significantly relates to the reality that business owners treat their business as their baby. I mean, it is their child, it is their equivalent child, and so yeah, I'm sure that experience of navigating difficult conversations with parents has translated really well to navigating those things with business owners too, right?
Yeah, that's actually a really great way to say it.
Well, kind of, to the end of your question or the end of your answer there, you brought up that you actually act as an intermediary between banks and lenders and the actual business owner themselves. And so to me, and I think a lot of our audience, that's pretty unique in the sense of I know a lot of business owners that They think if they want, a business credit line or they want equipment financing, they just need to walk down the street to their Main Street bank, and that Main Street bank holds the keys to the castle. And if they get a loan with them, great. If they don't, then obviously they're doing something wrong in their business. And the reality of understanding the entire credit marketplace and what's available to them, I don't think that knowledge and that understanding is there. And so I'm really interested for our audience of you kind of delving in and helping them to understand your service model and what you do for business owners, and how you help them.
Yeah. I think the first thing to understand is that because we have an extensive relationship or extensive relationships with many lenders, we can broaden the horizon, first of all. If someone's able to go to their current bank and get what they need, then they don't need us. But if they do go and they don't get what they need, then they probably do need us. What we do is the first thing I'll ask is, what happened? Why didn't you get what you were requesting? And then I ask for some financial information, usually financial reports, maybe tax returns, just depends on what the request is. And then look at it and see what is the issue. Maybe it's just how they were communicating. Maybe their reporting isn't as strong as it could be, or the bank would like to see it, and that was just a red flag right off the top. There's lots of reasons why it's not easy to get a yes right away. So we help with that. Will take the time to, understand what the true situation is. And then what we also do is we go to our network. And I know, well, first of all, everyone in my network is a person that likes to get things done. We share the same values. We share the same energy towards clients. And so what I call them my friends, really. Friends in business, because they're people that I would spend time with on a personal level too. And so I can take my client into a trusted resource and know that this lender or this bank is going to take the care with them that I would want them to. And so that relationship that I have on that side is very impactful to my client. They don't always know it, I think, but we get through a lot of stuff in the background that the client doesn't have to worry about, and we will have very honest conversations. That's the other thing. My lenders and my clients both, like, I'm going to tell you the truth. I'm going to tell you why this didn't work or what's going on. If there's a negotiation point that we need to work through, we're going to talk about it. We're not just going to have, like, I've heard of situations where, lender just goes quiet or the client goes quiet and the whole thing just sits there. Nobody's doing anything. Well, that's not going to happen if I'm involved, because I'm going to try and understand why. Why are the pencils down right now? Why don't they want to communicate it? And so that's kind of the value we bring. It's what we bring in as an intermediary. And then again, like I mentioned, the translation fact of just trying to make sure everyone's on the same page, speaking the same language, and moving in the same direction.
I think it's really valuable, from especially my past experience, that I operated as a corporate CFO in the agribusiness environment. And when I was working for a company at one point in time, we were an agribusiness and we were with an agribusiness bank. And that agribusiness bank had a bad deal in their portfolio with a business model that was very similar to the business in which we were operating. And they decided to not renew our credit line, even though we performed perfectly fine against all the covenants of the credit line. We performed perfectly fine. They ultimately just decided to no longer be in that market. And they were still an ag focused bank, but they wanted to be specifically focused in investing in farmland. They didn't want to be focused in any post farm gate activities, any further down the supply chain activities. And what that left me with was having to go knock on the door of 9 different banks to finally get two that would be willing to submit a proposal. And personally, I learned a lot about how different banks would manage risk and how they looked at our business model, and ultimately what type of structure of, say, a credit line they would put in place. That not all credit lines are created equal, and the covenants that they will place on those credit lines are not created equal. So the risk management isn't equal. But some banks are just, they have an appetite for working with your business model, and some banks don't. I think that's what I experience, and especially with Brady CFO, that we try to educate several of our clients that there is a whole world of credit out there that has to be understood. But the problem is it takes a lot of time and experience to understand it. And it really sounds like that's what you're bringing forward for the clients too, is not having to navigate, hey, am I with the right bank that would even be interested in doing business with my type of business model? Even if my financials and communication were great, like, do they even want to work with my business model, my industry? Can they even lend right now in this market? Are they interested in even doing business right now? Which is a whole nother story that, in this interest rate market, I find that there's just a lot of banks that they don't have the deposits to lend. And so while they may say they're in your industry, they may be kind of slowing down activity and not necessarily telling you a flat no right now, but just kind of leaving
Yes.
things very open and very vague. And it sounds like this is a lot of what you navigate and what you help clients through, correct?
Yeah, that's a really, I mean, it's a perfect example actually. And it happens all the time, especially now where well-performing clients are being asked to leave banks. Not everyone's blowing a covenant,
Yep.
and they're still on the lookout because banks are looking at their balance sheets, they're looking at their portfolios, they're managing their risk as they should be. I mean, that's we want them to. We don't want them to fail. So it's a good thing that they do that. But it's also very daunting, and I'm sure in your role you had many other things that you also needed to take care
Yep.
of.
Very much so.
And talking to 9 banks probably wasn't really on your list of things that you really wanted to be doing.
It did become priority at that point in time, but yeah, it did take a lot of time.
A lot of time. It takes a lot of time, especially when they're all having their own financing requests or their own document requests. They're all asking similar but different questions. They're all, so what we do is we become a hub for all your documents. We'll create a file. We'll put all your documents in there. We'll remember all your answers. We'll capture that in emails and have notes and things so that those 9 people can now ask me instead of you.
Yep.
And if it's something outside of what I know, then I'll obviously come to you. But that initial like matchmaking stage of, just trying to understand if it even makes any sense, we'll take that strain off of you as a CFO or off of a business owner so that you can focus on the things that make most sense. A lot of times, and as you said, it becomes a priority. Sometimes it's a priority because the company's struggling and has a lot of other things well, it's not always about struggle, but there's always other things going on. You might have a growth project you're working on. You might have a whole bunch of new employees that you're putting into place. There's so many things that can be going on other than talking to making these initial contacts.
Yeah. Right. I think the nature of it, just like you would with your supply base, if you were procuring materials, you would have some diversification, or at least you would have open relationships to manage risk. And that's not to say that, with your primary banker, you want to show them, in my experience, that you are very invested in the relationship and wanting to grow with them. At the same time, it's not the worst thing to actually, have a couple other contacts and have, fluid conversations open, just so if anything happens. I mean, a lot of people didn't expect Silicon Valley Bank to happen, that they wouldn't be able to go get their deposits, right? Things happen. And so, yeah, it's in your best interest to have some options. And it sounds like you're helping to alleviate for clients the reality of them having to maintain all those relationships and keep up with that. And you're helping to ultimately do that and have multiple facility options available for them. But you can be one, key, figure in it that, will help procure that for them. Does that sound right?
Yeah, and I think we're never in between to the point where there's no communication between a lender and a company. Like that's never the point. We're representing. Like we're always in this representation mode of I'm sitting side by side with you. We're in the meeting together. Afterwards we talk, this is what I heard, what did you hear? We take that side by side approach. So I want to be careful that we're not running interference, we're not presenting something that isn't accurate, we're not doing any of that. We're just being that extra set of eyes at times. And then to your point of having just access, when I was working in that company that was struggling back in the formative part of my career, I didn't know where to go. I didn't know who I could talk to, and I didn't know who I could call that wasn't going to charge me by the minute, right? And so our model also is to provide that consultative just availability to a business owner so that when they're up at night and they don't know, how they're going to deal with a certain thing, they can give me a call, they can text me, they can send an email, and I'll get back to them. We're available in that process. So again, not running interference, not getting in the middle of anything, but providing our network, providing our time, providing our expertise.
Yep, totally makes sense. So I'd love to understand. We talked a lot about what you do. I'd like to understand a little bit more of how you do it. That how do you approach building successful business relationships and solving creating problems for your clients? You've told us that to some degree about certain aspects of that. I'd love to understand practically, like, how do you go about that when a client comes to you and they say, hey, I have this need. How do you take it from step A all the way to step Z to try to get them a solution? That, yeah, tell us about that.
Sure. It really starts again with listening and understanding. So the first couple of meetings or first meeting, I try to get right down to what's the problem, what are the issues, what have you tried, just what's really going on. And I always tell people, like, you just give me the unvarnished truth.
Yeah.
Because that's the only way it can help you. If you're giving me the sugar coated, this is what we hope and this is what might happen and all that kind of stuff, that's fine for a sales pitch or certain kinds of meetings. But with me, I need to know what's really happening. And so building that trust and getting over that barrier of, it really is trust, is paramount at first. And then understanding what I see. So okay, so give me your last 3 years of tax returns. Give me your personal financial statement. Give me your AR and AP aging and your current financials. We'll take a look at that, and I'll ask lots of questions.
Yeah.
Why is this number this? What's all included in your, in these costs or these expenses, so that I can understand the company and what the true issue is. A lot of times when people come to me, they are asking for money. They're looking for some kind of a financial solution, but I've gotten into this, this look, and we go, wait a second, adding more debt isn't really going to solve this problem. What you really need is, maybe you need a CFO. Maybe you need someone that can guide in that aspect, shore up your accounting world and send you in a direction. Maybe your sales and marketing are just obviously failing. And as much as you don't want to say it,
Yeah.
it's true. And so we'll get into those harder questions. Maybe the people that started with you when you started the business, you've outgrown them. And that's an important piece of looking under the hood, is really being able to diagnose where the issues are. So that's important. I'm not gonna waste anybody's time going off on a financing project if we're not going to be successful because those other things aren't there. There's no such thing as, there is quick money and there are things that people can do fast, but good solutions don't happen fast.
The type of deep questions and consultative advice that you're providing, a traditional lender can't do that. That they there's a conflict of interest that they cannot lend and provide that advice. And so
Right.
in your role of asking those questions and then being able to point them in the right direction, there's just several banks can't even really point you in a direction. That all they can literally do is give you a no or give you a yes, and they're not going to say much more beyond that. So yeah, you being able to kind of diagnose and to try to point them in the right direction is just, yeah, it's something so critical. It's something so important. Yeah.
Yeah. And I think, like, being able to think like a banker and think like a business owner, those two things, marrying those together is really important, because a lot of times businesses are like, I don't know what's wrong with our bank. Why aren't they doing this? Why aren't they doing that? Never missed a payment. Why are they asking us to leave? Well, we've got to be able to translate that side. And then, the banker also, like, having their questions. I think it's really important that we are able to just kind of bring those things together. And I don't know. I just think it's critical.
Yeah, no, I agreed. And it just, to that point, because otherwise, and banks have to make critical decisions just like business owners do, right? That banks get to choose what target market they play in. They get to choose what's too much risk for them. So just as a business might decide to shed particular clients, and that's not to say that they're bad clients, they're just no longer a fit for the strategic, vision of where that business wants to go. But what's difficult is that, yeah, banks, because of the conflict of interest, they may not always be able to say why, they're shedding that client. And there may be absolutely nothing wrong with that client, but that client could be asking, sounds like a lot of questions about themselves, that could start to get very, I always say, insecure about, am I doing something wrong here? And you could be doing absolutely nothing wrong. You just need to go find another banking partner. And that banking partner, that you had, that they may not be the right partner for you for the next 5 to 10 years of your next level of growth. And, like when what you're doing to help navigate that and to help place them, it's just, I just find it so critical. And I appreciate what you said, that this is a practice that I feel like is important. That, I think, if you're seeking equity investment, you often want to paint, the rosy picture as to what the growth potential is. And that's not to say that you don't want to do that with a lender too. You do. You want to show the growth potential. But to your point, full transparency is really key. That I've experienced really good bankers that, it just, the reality is I've always tried to be transparent. I've always got the feeling that if I ever tried to hit a skeleton in the closet with one of our clients or with one of the companies I've worked with, that they would be able to sniff it out pretty quick. And I would actually, I would have burned the relationship had I, tried to hide something. That at that point they wouldn't have trust. And so I appreciate your note about transparency there. That I feel like that's so key too.
Yeah. And think about it. I mean, you're going through a full underwriting experience.
Yep.
Wouldn't you rather just put this out in the front, like instead of investing 6 to 8 weeks of sending all this stuff in and then knowing when they finally ask that question of, are there any lawsuits, or like whatever you want to name the skeleton, why not put that out on the front side? Because it just wastes everyone's time if you're not able to move forward. And what about just the good feeling of thinking you have a deal, and then the underwriting gets a little deeper and then you don't, and you knew all along what it was that was going to trip them up. You were just hoping they didn't see it. I did have one client one time who he owed back taxes. And when I asked him, well, what do you actually owe? He kept giving me the most current statement. What I didn't know was that county didn't accumulate all the back taxes on the current statement. There was 2 other years that were in a drawer somewhere. And so as we're going through, getting ready for closing, all of a sudden I'm like, what happened here? And he's like, well, I was hoping, and I'm like, oh. So then we had to solve that. We did get the deal done, but it was a 6 week delay
Yep.
because we had to deal with that. So much better had I known the full picture.
I think that's the reality. I think for some of our audience to understand, the lenders have a team that their job is to go sniff this out. And so,
Yeah.
I mean, that's the reality of it, is that they want to understand what is the risk that they are lending against. And they're willing to take some risks, but they have, underwriters that their focus is to test the viability of this company and historically how it's performed. And if there are those skeletons in the closet that have to be brought forward. And yeah, if you're not transparent and upfront about it, that they're going to find it one way or the other. And, one of the worst things I think that can happen too is you get into a relationship, things weren't what you said they were. You happen to get the deal done. You don't perform and you either lose that line or that bank, and bankers have relationships, in their local area, et cetera, too. And they could very well tell people, hey, don't work with this guy, or don't work with this gal. That, this is like, I did a deal and it did not turn out the way that we thought because, things were cooked or, things looked a particular way. And this is what we understood. And we went through full underwriting and it turned out this way. So transparency is key. I agree with you that it just makes a lot of sense. So for our audience, you and I were talking about this before we started recording, Cristine, that there's a lot of macroeconomic, data out there in regards to, what's supposed to happen in the economy, what people think, et cetera. But, most of our audience is listening what's happening in Main Street, like what's happening in the day to day, what's really affecting their business, in the next 3 to 6 months in their local area, et cetera. And really interested in understanding what are the key challenges and opportunities in commercial financing and the capital markets right now that you see? Like when you're working with clients, what are you experiencing that you didn't experience 2, 3, 4 years ago that's kind of unique about 2024 right now?
Yeah, I think, and again, I'm a very practical person, so I'm in the weeds with people. I just can't believe how long it's taking to get things through banking systems
Yeah.
and and to actually get from start to finish. So if you're thinking you're going to be able to go get a loan in 30 days or 60 days, like add 4 more months. Like you really have to have extended timelines on this. And what that means is there's that much more need for planning, preparation. It's just crazy how long it's taking. I don't know, like I think when the interest rates were really low, banks were being very creative. Maybe they could impact some pricing, maybe they could impact some covenants, maybe they could, make be a little bit more enticing for clients or for customers. But right now, everyone is so by the book, and they should be. Again, prudent lending practices are there for a reason. And so I think that banks are just being very, very choosy.
Yep.
And a lot of my friends in the industry, they'll either say we're open for business or we're not. Right? And so I think you had mentioned that in the intro, like things are things are getting done and good deals are getting done. I'll always say that, but a lot longer. And if you're in a hurry, there are other ways of getting, working financing projects without traditional banks. We can go outside of that.
Yep.
But even there, in things where you might be able to typically, turn something in 2 weeks or 3 weeks or 4 weeks, that's still taking longer too. People are being very careful.
And I think even for what I'm seeing personally, I think even if deals are done, they do have a little bit more teeth to them too. That I think there's a lot of banks that are struggling with sufficient deposits to do the lending as well. That in this market you can still earn a money market savings rate of close to 5% APY. And that may not be at your local bank, right? And so if you've moved your money around, that just means they don't have the deposits there that they would usually lend against. And I saw a deal recently where, for our audience to understand, a borrowing base is when a lender gives you a credit line, but as a factor of your current assets. So, they take a percentage value of your cash, your AR, your inventory, and they factor all that, and they say, hey, we'll lend, this amount against the factor of current assets that you have. And in one deal I had seen in the language that I'm used to seeing, that, hey, they'll factor 100% of cash and say like 70% of AR. In this particular instance, they put the language, we will only factor 100% of cash on deposit at our bank. It just shows you like their motivation was they would do the deal, but only if you brought all the deposits, and there was surety of all the deposits that would come with it. And so, to your point, I've had a deal recently, of helping a client get financing that took 6 months. That, yeah, the idea of this happening in 30, 60 days, I agree with you. And I think a lot of people should probably expect a little bit more teeth in regards to the new deals too. That what are their covenants, and what are going to be the expectations in this environment, that they're going to be a bit tougher. So yeah, what are, in your experience, what are the benefits of structured financing solutions like the SBA and USDA programs for businesses?
Yeah, the SBA, I always tell my clients like it's going to be the hardest probably transaction to perform as far as requirements and paperwork and things like that. But you're gonna have a really clean deal. Everything, all title, all the work done to get an SBA deal done is going to be very clean at the end of the day. So that's one advantage of all of the scrutiny that goes into it. There's a lot of safety in that. The other thing about SBA and USDA is they will, because they're providing that guarantee to a lender, you might be able to get something done with a more traditional bank that without the SBA you might not be able to.
Got it.
They can sometimes take into account projections and do more projection based deal. The terms that they offer are longer so that the debt coverage can be worked better for the company. There's a lot of things about those kinds of deals that can work out well for the customer. They're not easy to do though, and that's that sometimes they get that bad reputation of we don't want to do an SBA deal. I talk to a lot of bankers that don't even want to deal with the SBA. But I'm also seeing, my SBA lenders that I have in my portfolio, they work with you. They care about these businesses. They get things done, and they know how to really structure it so that it can be successful. So I don't know if that really answers the question, but I think there's a benefit in the terms. The pricing is always going to be a little bit more, and you're paying for that SBA guarantee. But if you can't get a deal done otherwise, and it's really critical, like an acquisition or something that you really want, to move the company forward, you count that cost for the reality that you actually are going to be able to get the deal done.
Yep, absolutely. Yeah, that was great. And I am, wondering, as we're getting close to wrapping up here, we kind of spoke about it, that there's this entire market of, capital or credit capital available that, again, I think a lot of business owners think that they can walk down to their traditional bank on the corner and that should be able to, suffice all their needs. And you and I both know that that's not necessarily the case, that there's all different types of lending solutions, different types of products that banks offer. Some banks offer some banks offer others. In your experience, what's, an alternative, credit capital product that, our audience should be aware of that might be useful for them, that, is not, how do I say, is not very traditional, that is not well known, that might be interesting for them to know about?
Yeah, I think the asset-based lending world, there's some very strong asset-based lending groups with your larger banks and all of that, but there's also some that are just separate from that will really just look at what you own, and they will base the transaction on their ability to, if it goes south, they've got these assets backing it, and they can support the loan with real estate, AR, machinery and equipment, purchase orders, things like that. So there are ways to structure lines of credit or factoring. There are ways to get cash into a company that isn't really finding a successful path with a traditional bank.
Got it. Good to know. Well, yeah. So Cristine, we always like to wrap up, with our guests, with one final question. What's one piece of advice you'd give to CEOs in a lower middle market who are looking to accelerate their company's growth and create lasting value?
I love this question, and I answer it similarly every time someone asks me. I think it's create a great team. Put the right people around you that can provide you with the knowledge, they can expand your network. Don't try to go it alone, and don't think that you're the one that's supposed to know everything, because you won't and you can't.
Yep, absolutely.
And so put yourself around great people. And I'm not necessarily saying that it has to be like, go hire this person and go hire that person. I'm just saying, put yourself with people that can help you go farther.
Yep. I to your point, it's not even necessarily about hiring. Sometimes it's just about having the right advisors. That doesn't need to be a W-2 on your payroll. It's just about having the right advisory team and the people that you're connected with that can help you. So having that personal team is so critical. So yeah, thank you, Cristine. Yeah, please, Cristine, tell us how our audience can find you. Where can they access more information about you and what you do?
Sure. You can find me on LinkedIn. I think that's how we found each other, actually.
Yep.
So that's a good spot. On our website, csuiteimpact.com. You'll see my team, and you'll see our whole broad range of advisors and advisory services there. And email O'Keefe@csuiteimpact.com.
Sounds great. Yeah, awesome. Thank you, Cristine. Really appreciate all the insight you gave us for our audience, business owners, and yeah, what they should be understanding regarding, capital markets, credit solutions, et cetera, and what value you bring. So really appreciate you. Thank you for being on the podcast.
Thanks. It's a great conversation. I love it.
Well, thank you, everybody, for listening to this most recent episode of Accelerating Lower Middle Market Value. We hope that you found actionable insights that you can implement today to accelerate your business value. Wanted to give a shout out to our sponsor, Brady CFO. Brady CFO is a team of CFO advisors that help business owners in the lower middle market build the business of their dreams via comprehensive growth strategies and financing that growth. If you'd like to learn more about Brady CFO advisory services, visit bradycfo.com. Thanks, everybody. Until next time.